Well, welcome to our crop hour for today. I'm Jack Davis, a crops business management field specialist out of Mitchell, South Dakota. And just a reminder that this is the final crop hour. So the season will be done, but be sure and check out if you missed them or want to review, they'll be up on the YouTube, the SDSU YouTube and the crop hour. So there'll be a chance to review or pass those on. Take a look at any that you missed or want to relook at. So today we have Dr. Dearson and myself presenting. We're going to take a look at crop insurance and kind of an outlook for our spring markets and the markets going forward. So I will start with Dr. Dearson and I'll let him take it away. You want to share your screen, Matt? I think that's the way we were going, wasn't it?
Weren't you going to start, Jack?
Oh, am I starting? Is that the plan? Seriously?
Well,
okay.
I can
start. If you were planning that, let's go. Let's do that. That's fine.
Because I've got those transitions from you to me. Remember?
All right.
All right.
That'll work good. All right. Yep. You know, that was a day ago. So sometimes you lose it a little bit. That'll be fine. All right. Let's find. And get back to the beginning. Okay. I'm going to shrink the baby. All my little add-ons.
Looks good on this end.
Okay. All my little add-ons block my screen sometimes, so I can't necessarily see what we got going. All right. Let me back up one. Well, anyway, we'll just leave it here. We're going to talk corn, beans, and hay. Take a look at where we're at, compare some to the baseline that just came out the week of the 24th. The USDA does their baseline. The next few reports coming out of USDA will be our March WASDE, which is the 8th, I believe, of March. And then the planting intentions. So that'll be at the end of March. So that'll be a big one that the market will be looking forward to. So let me do this. So we got my pointer. We can guide along here. So a lot to look at here, but I just wanted to show our two WASDEs that we've had. This would have been kind of the final production estimates, and then came out in February. And then this is information from the baseline where they adjusted for the baseline and do the long-term projection. And here is the projection for 23. So not much change in the February one. A little decrease in use and 25 million bushel coming out of reduction in ethanol and the other out of the food and industrial. So that's really that reduction that came there. Production really held the same, of course, and stocks to use ending up in that February one right about at 10, which is that's kind of midway between a tight one and a mid-level one. It's not overburdensome, but it's not as tight as when you get down below the 9. So just kind of probably saw that in some easing off of the markets the last few weeks. Oh, let's see, what else do I need to talk about here? Moving over to some of the baseline, they adjusted that a little bit more in the baseline. And then our outlook for 23. And just some things on comparing the baseline 23 to a 5-year average. Production is up about little over 1 billion bushel. this number compared to a 5-year average. I don't have that shown, but I'm just telling you that. It does end up with our low starting point with our total supply is only up about 475 million bushels. So that's not a lot, even though production on the long term is showing more. Our total supply for 23, the new crop coming up that we'll be planting, is not a lot more. It's about 500,000 more than the 5-year average. Just wanted to let you know that. Total use is up compared to the 5-year average on our long-term projection of 385, and ending stocks up about 90 million bushel. And then in their longer term, as their new crops coming on, predicting that to go above 10, almost to 12. So we could, with our 23 crop, if those things come about, we could see at least a, say, as we're comparing here, 570 to 670, $1 drop in average price. 570 still probably a really good price if farmers can get that and have yield. Things that are probably optimistic somewhat, I would say, is the 92 million planted acres. We'll see how the spring goes. A lot, of course, depends on that. And then, of course, that brings up harvested acres, and using a pretty good yield estimate, which is about 8.5 bushel greater than the 5-year average. So just wanted to let you know those things starting out on the corn. So out of the crop that we're using up now, the 22 crop, the big thing that we saw in our January was the amount of harvested acres. So we had a larger amount than normal of harvested acres decrease. So harvested acres dropped really probably unexpectedly, but it kind of caught the market off guard in that January report. And we've digested that, and now looking towards spring in South America, of course. I'm switching kind of between US and South Dakota. So same type of thing happened in South Dakota. We abandoned acres or weren't harvested for grain. Yield was, on a national basis, was fairly steady. I mean, we were down a little bit, but kind of right in with where we have been the last few anyway. And our statewide down, probably 20 bushel from peaks. So coming in right at 130, somewhere right in there, is where we ended up for our South Dakota yield. And then our corn production down compared to the last couple years. And that's really probably been reflected in basis through this year. And if we look at new crop basis, we'd be back to anticipating that we'd get planted good and there'd be plenty of corn around in South Dakota, because the bids right now are fairly wide. So where areas that we see some decrease taking place in a national would be on feed and residual, showing a drop there in bushels that'll be used in that area. And then here is our ending stocks anticipation for the US corn crop. So off of these peaks when prices were low, but not near as low as what we were back 11, 12, and kind of 13 as we started to build those stocks back up. Just wanted to show some charts of price. This is futures price on the nearby corn long-term back to 2012. And then I just broke it down into thirds. So below 470 being the low third, in between 470 and 641 being the middle, and above 641 being the hot top third. And what I did was just take one of these peaks and a low down here the difference, divided them in thirds, just as a reference, kind of show where market is or where price has been. I got a few more charts that I thought were interesting in comparison to other years. And like this might be our transition slide, or one of them that Matt was talking about as we started out. Our insurance price is going to end up very similar to where we were last year, but we took two different paths getting there. As in last year's, the 22, we were working up. And this year, we were really kind of steady to working down to get, so two different kind of trends, I guess, and ending up at the same price for our spring insurance price, and just thought that was interesting. Now I have a few more years to compare to that. And these are, as it says, the daily close of December contract, June 1 of the prior year to December 1st of the expiration year. So this will be the December 23. This was December of 22, starting back in June of 21, June of 22. So then I'll add some more years to this. I thought this was interesting, is when we had our big run up in 12 due to drought. Look how, yeah, I mean, we're really tracking very close to that. And I think you think of, we get into spring, not much news, have maybe good planting conditions, and definitely did in 12. Things got planted early, kind of looking okay, but then we get into probably pollination time frame, hot, dry in the major corn producing states, and it just took off. So here was 22 and how it did. Right now we're kind of really tracking right along that side. So it is going to depend on spring production and summer production. Another path, we started to recover in 13, and you can see what path that price took in 2013. What did I do? I just added back in our where we're at currently, the blue line. So really the same two graphs. And then showing most recent years, taking the other two out, and we've been really below that $5 for quite a few years. So being up above 5 and above 5.5 is pretty decent. And then again, the long-term continuation chart. So looking at soybeans, again, our January WASDE and then the February WASDE, not a lot of change. Down some in the crush, and I believe some of those margins had decreased. So that's probably the explanation there in what they anticipated. And then here again, the long-term projections. So in longer term, the long-term outlook versus a 5-year average, we are at a total supply of 11 million more bushel, which is, pretty minute, not crazy. Ending stocks are really, let me get to about 211 million bushel less than the 5-year average. So that is quite a bit less. And then of course our price versus 5-year average is almost $2. It's $1.91 higher than our 5-year average price. So beans still looking, not as good of insurance price as we had last year, but still pretty decent price compared to 5-year average. We didn't lose a lot of harvested acres on beans, and I would say a lot of that was there was still some yield on beans, and the price was very strong coming into harvest last year. So people are going to go get it even if the yield is down quite a bit. As we saw, production was down, and most of that due to yield versus the corn, which was a lot due to abandoned acres and just not harvesting those poorer acres for grain. Exports were off, and those will either help or hurt us as we go forward throughout this year and use this crop up and into next year. Ending stocks are really fairly tight, and we've been at this level before. One of the things that you keep hearing about is renewable diesel, which is a little bit different than biodiesel. It's a diesel that is able to be dropped in, used. It doesn't have to be blended. And there's a lot of talk of plants that are being built now and coming online. A lot of those may not be in use in 23, so that may have more impact as we move into the 24 crop. So a couple years out yet before we maybe see more of that demand coming in. And here is our South Dakota bean production, a lot due to yield loss. Same chart, except for soybeans and November contract starting the June the year before. So kind of follows that same time frame, you know, through this through fall and through early spring or new year, we were above last year's price. We did fall a little bit below, and we will be below as far as insurance is concerned. Here is the long-term continuation chart, and this is said it goes, it's the nearby contract, ignore this up here. It's the nearby contract switching over to the new one each month or as a contract expires, going to the next closest one. And again, broke him into thirds, 11, 22 and below being the lower third, 14, 15 and above being the higher third. And again, I just took this peak and this low and did the difference and divided them into thirds. One of the things that's really probably prominent in the crop is the amount of hay and the hay supply that is out there. And this has implications for expansion on cow herd too. So here is a long-term chart of hay, the blue being the production, and the red are May stocks. So we are below hay levels from what we were in 2012. That to me is interesting because that may have big implications as we try to maybe build back the beef herd, and if some of those areas would happen to come out of drought. It could be slow to come back till we get some of the hay stocks back, especially this December 1 stocks probably being above this 80 level, really. If we think back to this time frame, we really probably didn't start building back until 14 or 15 on our beef cow herd, and we are well below what we were in 12 for December 1 stocks as a nation. Here's just showing the percent change in hay stocks from 21 to 22 by state. So South Dakota was up, but all of this, and if we had the drought monitor, this would all show really drought areas. All of these guys down and down in through here. Yeah. Here is our South Dakota stocks and production. So South Dakota may be sitting a little better. but our states surrounding us surely are shorter. And here, kind of a normal winter use as of our December 1 stocks. And really showing up, you know, if this trend would continue or stay. It will be interesting how we come out on our May 1 stocks. That's what I have. Think we probably save questions till the end, or are we doing some questions now? Let me get on. So I'll stop sharing.
I don't see any
And then-
questions in the chat, but if folks have questions, they can use the chat down there. We'll monitor that.
Yes. Yes, so he puts up the poll. Please answer the poll, and we'll give a few minutes for that.
And Jack, you were showing, just as way of transition here, for the baseline estimates and the WASD, you were showing the February WASD and the regular set of USDA baseline numbers. Okay.
Yes.
And when I start, I'm going to be showing, this is for the audience,
Yes.
for the most part here, I'm going to be showing an added set of adjustments made or what's expected to be in the WASD from the USDA Outlook conference last week. I took the mainly the 2023 crop numbers from that, and I'll show you where that has its implications. So just so your numbers were accurate, we're not contradicting those. I'm just showing a little bit of a change, and we'll compare what the trend has been to the baseline estimates. So it's kind of interesting.
Yes. Thank you, Matt.
Explains why the prices have gone down so much this week.
Yes. Yes. Okay, I'll stop share, and we'll have time for some questions, or if you want to put a question in the chat, that will be fine.